Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of December 16, 2013. Hello, I'm John Thomas from Primary Residential Mortgage, here to give you your update. Well, Maryland mortgage rates did move higher last week. If you look at the bond chart on the screen, you can see bond has been selling off. We tried to recover, but then last week we sold off again. So the long-term trend is for mortgage bonds to sell off. Friday, you can see the green candle. We did get a slight recovery on Friday, so we are going to recommend cautiously floating your Maryland mortgage rate to start the week. But again, we do say cautiously. The long-term trend for rates is for interest rates to move up. If you look at the chart on the screen, you can see the dotted line there is the long-term trend for bonds. As bonds sell off, interest rates move up. The blue line there, that's the ceiling of resistance, which is capping mortgage bonds from moving higher. We've hit that line and sold off. We are cautiously floating, hoping we can break above that. But if we get turned lower and the momentum continues, you can see the dotted line driving all the way down to that red arrow. That is the next floor of support. We have no support for mortgage bonds till we hit that low, and that's about 5% for the interest rate. So long-term trend, rates will be moving higher. Short-term, you can float and see if you can get something. But if the bond starts to sell off, quickly switch to a locking stance. Now, in economic news, the U.S. Congress has tentatively reached a budget deal, which will give us a budget till 2015, which will avoid a government shutdown in January. This week, the Senate's expected to vote, and then Obama would sign off on it. The deal reduces the deficit by $23 billion and does not raise taxes. The budget sets government spending at $1.012 trillion for the current fiscal year through September. It's supposed to save $23 billion in savings, but with a $16 billion deficit, I don't think that really does much. The plan does call for higher fees on airline passengers, changes to government pensions, and increased annual discretionary spending. And it does not extend jobless benefits. In other economic news, retail sales for November 2013 came out at 0.7%, higher than expected at 0.6%. So that is good economic news. That helped rally the stock market. That was bad for mortgage bonds. But we did see the producer price index come out. That's a measure of inflation. It came out at 0.1% and year over year at 1.3%. That measures inflation at the wholesale level. Very, very low inflation. That is bond-friendly news. And then we saw on Thursday the weekly initial jobless claims came out. It surged higher by 68,000 claims. It jumped from 300,000 claims the previous week to 368,000 claims. That was unexpected, and that is a bad read on the labor market. So the Feds will definitely be looking at that, and when they're deciding to taper, so we do think they're going to push tapering back to March 2014. In housing news, the FHA lowered its loan limits for 2014, and they also lowered what they're going to calculate the loan limits on. So the jumbo loan limit dropped back down to $625, and the loan limits calculation dropped from 125% down to 115% of the median home sale price. So you're going to see FHA loan limits drop across the region in all areas because the calculation has now changed. And then we also saw CoreLogic report that foreclosures for October 2013 were 48,000, which is down 30% from October 12, which was 68,000. Foreclosure inventory dropped 28%. For this year, and the rate of serious delinquency is at the lowest level since November 2008. This is good news, but we've still got a ways to go because we got over almost 900,000 properties across the nation still in foreclosure, which is 4 times the normal. We also saw the FHFA announce it will increase the G fee, which is kind of like a hidden tax on conventional loans. So any loan delivered to Freddie Mae or Freddie Mac pays this G fee, and it is going up. So you'll see increase to mortgage rates in March and April to cover this hike in the G fee. Congress figured out a way to tax people without saying or tax them. They have this hidden G fee which covers things. It's even included to cover spending in the health care bill. So it covers unrelated items to mortgages, but they slip it in and make anybody get a conventional loan pay the G fee. In the local news, the next free first-time homebuyer seminar in Towson, Maryland is Saturday, January 25th from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register for that event by giving us a call in the office at 410-412-3319, or you can register online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.